Good evening and welcome to the Australian Stock Market Show. With global panic sweeping world markets last week, the All Ordinaries Index closed just over 2% down. So will we see further falls in our market this week, or is now shaping up as one of the best buying opportunities of the year? Stay tuned as we will discuss our thoughts on that shortly. We'll also take a look at these sectors on the Australian market, and for our main topic tonight, we get into the top 10 metal stocks to buy now. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like IGO Limited, Liontown Resources, Deep Yellow Limited, the sectors in the Australian market, and much, much more. So get comfortable as we'll get into those soon. I'm Philip Tortevsky and I am your host for tonight. And joining me are two of Wealth Within's highly experienced analysts and professional traders, Janine Cox and Pedro Benales. And together we're Australia's most trusted stock market educators. Good evening, everybody.
Good evening. How are you?
Good. I'm good, Janine, but I have to say we do have a very special guest on the show today. Now, Pedro, for those who don't know, Pedro is an analyst at Wealth Within, and a lot of what goes on here on our show is done with Pedro's research. So welcome to the show, Pedro. I know you're going to bring a lot of fantastic, valuable knowledge.
Thanks, guys. It's awesome to be here. Great to be back in Melbourne as well, and glad that the weather's turned out great to give me a good welcoming.
And I just have to say, you know what happens when the cat's away?
Well, yes, the mice will play. All right. Well, tonight, as mentioned, we get into the sectors in the Australian market. But first, let's take a look at this week's hot stock tip. Pedro, what have you got for us tonight, mate?
So tonight's hot stock tip is Nanosonics Limited. It's a stock that's in the healthcare sector. So let's get right into it and bring up market index. So on the top here, you can see that it's a stock in the healthcare sector. It's a little bit of a lower cap stock, so it's not for the faint-hearted. It's not for everyone. As you can see, the market cap is at 854 million. PE ratio is a little bit high for my liking, but you might get that with these types of growth stocks. You know, it might just be that their profits haven't come in just of yet. Now the 52-week range it's at the lower range of that spectrum, so that 259 level. Now keep an eye on that level and remember it for later.
Now I have to say, Janine, I am the small cap guy around here, so I don't know what's going on. Pedro's taking the small cap space. We've got to be careful.
He might take your hat.
He might, all right. But are we ready for the chart now, Pedro, to get into the juicy stuff?
Let's do it. Let's get into the chart. So on the screen right now, we've got a monthly chart of NAN. We've got a few lines there, so I'll just explain what those are. So currently the stock is trading at $2.82, and that's the close there. The month hasn't finished yet, so it hasn't fully closed, but that's the price that it's trading at. So you can see that it's come back at this nice range that it spent around 2 years and 7 months back in 2016. And it's that between that $2.60 and that $3.60. Now we know that $2.60 is a strong support level, so it could very well be about to find support there. Now we've got these other lines that you see coming down there. So these two parallel lines. The range is 65% from that all-time high there to that low, and it's between 17 bars. So that's 17 months. So I've just extended that line and copied it over to this right-hand side where it's currently trading. And I've put down that 65% and the same amount of bars.
Well, that's interesting, isn't it?
It is. So if history was to repeat itself, it could actually be trading down to that $2 level if it doesn't find support at the $2.60. Now, if you were to enter around this current level, we've got a risk to reward ratio here. So if you were to enter currently at the $2.82, you've got a reward possible of 22% and a risk of 13%. So that's not bad.
But are you going to do that in light of the current bar?
Exactly. So if this is closing at its low, and if it does close for the low for the month, I wouldn't be very excited. I'll be thinking that it's heading down to that $2 level like we saw before.
But what's interesting about it, though, is the fact that this level that you mentioned before, around, what is it, $3.50, it's proving that that's such a strong level. If I can bring the chart back without shrinking it so small that you can't even see it without a magnifying glass. But you can see the strength of that level there, and it's hit it once again. So we actually like it when this sort of thing happens, because it could just test support from that low, couldn't it? And then turn around and then break back up through that high. Or it might break through that low and we'd be saying, so what? You know, great. It could just dip below that level like it did on a number of occasions before it turns back. But we're going to get a better entry because of that, aren't we, if that happens?
Exactly right. And that's what really was drawing to me.
That's great.
About it, yeah.
Great choice, Pedro. I love everything you're showing there on Nanosonics. So definitely one to put on your watch list now. That is it for our weekly hot stock tip. Shortly, we'll get into our topic for the night. But before we do, right now, it is your opportunity to get involved in the show and have your questions answered. Now, remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your questions to the number on your screen. Now, the first caller in to tonight's show right now gets a free copy of Dale's book, Accelerate Your Wealth. So pick up your phone right now and dial 03 9290 9988. Now, while you do that, tonight we'll give you our thoughts on the sectors in the Australian market. So let's get into it.
On your screen right now are the sectors in the Australian market, and gee, am I excited about this tonight, because this is my favourite week in the month to talk about the sectors.
I thought it was currencies.
Oh, yes. Well, that's another story, isn't it? Look, at the top of the list there, we've got information technology still right up there, which is amazing. 25% up so far. Financials are 16.6% up and have done nicely. I'd actually like to see some of the financials pull back a little bit and then before they make their next move up. Consumer discretionary. Now, you know, we've seen a lot of movements in some of these consumer discretionary stocks, but there's a lot of talk now about whether the consumer discretionary stocks are going to continue on given the sort of pessimism that's around. And, you know, are people spending? We won't really know until sort of around October, November.
Yeah, and we know the consumer discretionary sector, that is one of the leading sectors that gives us that indication of the rollover. But I mean, just by looking at that, you know, they're all up. And it's funny because last week there was obviously carnage on the markets. There was so much panic going out, and you know, we saw, I mean, it'd be interesting to see how that list looks on a weekly basis, because I would argue that maybe some of those sectors are up given everything that's happened.
Well, that's a great idea, but just before we do, look at the bottom ones we've got down here: communications services, energy and materials. Well, I think once the boom really hits and starts humming along, we're going to see some of those ones at the bottom just go right up to the top, because they're the more growth areas. But
they're the exciting ones.
If we go to the week like Phil's talking about and we have a look, we can see there, you're right, it's flipped. Consumer discretionary is up 2.6. It's actually been the leader over this week. So
isn't the panic supposed to be
hugely volatile. Like, you know, where's all the money coming from? That's what I want to know. But there's so much money on the sidelines that there's not funny in term deposits at the moment.
And that's a show that we are going to get into on another week, so stay tuned for that one. But did you want to get into the material sector really quickly, because it's a very interesting sector that we're looking at. And I mean, as you know, we've been talking about, if this sector does find support, it's one of the biggest sectors on our market. Obviously, financials is the other big giant. But if financials is finding a low, given its really strong run, then we have materials starting to get going, then I think, you know, the recipe for the next boom is probably upon us.
Agreed. And look, Pedro and I were arguing about what chart we were going to put up before the show, because he likes energy and I like energy too, but you know, I like materials given the opportunities that will come up eventually, but it's just about patience right now. But you know, often we look at what happens with materials, and it is one of the more volatile you know, areas of the market. And this is actually a period before the last boom. Now, if you think about this, we saw a big rise into that high back before the GFC in 2006. It peaked out, came back, went for one last run, 86 or 87% as part of that last rise. So once we get this whole mess cleaned up, and you know, we see a correction possibly back to 15,000, finds support and breaks back up through these highs, I think we're going to see similar sorts of moves to what we saw pre-GFC.
All right, well, that is it for our thoughts on the sectors in the Australian market. Now, before we get into our first theme, I'll remember to get your questions answered live on air. you'll need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Sean is asking about market psychology. He says, I'd imagine the hot topic on everyone's lips is where is the market heading? Or more likely, the herd is nervous and heading for the exits. Now, calm minds are needed in times like this. My question is, can you guys pinpoint where in the cycle on the graph we are now? Now, Sean sent in a graph, but we're not going to show his particular graph of what he sent in, but it's a very, very interesting question, Janine, talking about market psychology. Where are we? What are we likely to see before the end? And I guess some thoughts, are we there? Are we moving there? Where are we?
Yeah, great point. Look, I actually did like Sean's graph. It was very interesting. However, as Phil said, you know, this one is that I've got on the screen now that I want to show you first is going to give you a really good idea of what's going on. And this is all based on Dow's theory of the market. And I like the questions that Sean's asking, the way that he's thinking about this. So thanks for that, Sean. But look, I mean, the market goes through a number of phases. In the bull market, we get phase one, renewed confidence. We get that initial push up. Often this is the money, the smart money coming into the market. There's a bit of a breather, a pullback, and then off it goes again. And this is where more money starts pouring into the market, improved earnings start coming out, a pullback. We've seen, you know, mixed earnings, but you know, reports of mixed earnings in the United States, and yet they had a significant number of companies, more companies reported on the plus side than on the disappointed side. So, you know, that's interesting to know. I'm always keeping an eye on what's going on in the US at the same time. We see a pullback because obviously we're partway through our reporting season, and then this rampant speculation to the high. Well, we're nowhere near that rampant speculation, so we're somewhere in this phase here. I think, you know, we're well past that early phase of the market because we've been through that, and then we saw the COVID pullback. We're coming out of the other side of that, and I think we'll head into that more improved earnings phase, especially if you've got sectors like consumer discretionary that have done well, you know, and eventually that might slow down. They've got to justify the earnings to then make that next leap up, which, you know, there's always pessimism around these times that will this happen, but then it does. You know, we see the market push ahead.
But I mean, that's the point itself. You know, when there is ultra pessimism around the markets, generally that is not the time when markets are likely to crash. I mean, any thoughts on this?
Yeah, definitely. So they'll never let you know when the market is going to crash. It just crashes, and it's usually at that rampant speculation phase. And really, we're seeing a bit of an equilibrium at the moment. It's not rampant speculation. It's not very pessimistic. So I agree that it's probably at that improved earnings phase. And it's also fractal as well. So we could be in a larger phase. You know, you have to look at the smaller phases in between those larger phases as well.
Well, there you have it. Oh, sorry. Did you want to add something?
No, that's always, but no, not this time.
Yeah, well, hopefully that answers your question, Sean, on where we are. But great question. Thank you for sending that in. Now, we do have a caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
Steve.
Steve, thanks for calling in. What's your question for us?
So I did a mentor course a couple of years ago, so I keep my eye mainly on the top 50, and I've been watching Telstra weekly chart for a short-term opportunity. I'm looking at buying in at about $3.97 after it bounced off the support level last week. And I think it's got some upside of about 11%, and if it can get through that, I think it might go beyond $5 or more.
Well, it sounds like you've done all your, or crossed your I's or dotted your I's, crossed your T's, whatever that is. But great trading plan then. We'll pass this one on to the guys to have a look. Thank you very much for calling in, Steve. I'll go to you, Pedro, on this one. Telstra, sounds like a fantastic plan's already in place, looking to buy lows. Definitely trading the top 50, which is great. So good on you, Steve. I like Telstra. Telstra's one that I've actually been looking at. It's crossed above that downtrend line, so as we can see on the screen right now, and it looks like it's found some type of support there along that downtrend line. So
it's looking quite strong at the moment. If it manages to get above that $4 mark, I'd be a little bit more interested. What do you think?
Yeah, $4 is where it's kept on bumping its head and getting stuck a lot. It gets through it and then comes back. But I actually want to talk about something else because Telstra restructured, as you know, some time ago, and that got me really excited. But then the market poo-hooed it because they wanted to break up the company and extract that extra value, and the CEO wouldn't be in it, which, you know, I take my hat off to her for that. However, recently I'm driving along and I see this billboard and I can see Telstra's symbol in the top corner, and I'm looking at it thinking, what's that word? It's a little C-H-A-T, chat. Right, some ingenious marketer, and it really made me look. So, you know, I've been waiting for Telstra to come up with the marketing because they're more a tech company. So this could be the start of it. Am I getting my hopes up too soon?
Well, are you?
But it's exciting, though,
Is
to
the
see
chart
that
exciting from your
Telstra.
perspective?
Look, Telstra's generally not exciting, right? It's generally a plotter. You put it in the portfolio to underpin the portfolio. You get dividends, and you know you might get some decent capital growth out of it until it gets into a trend. So what Pedro's talking about is that this could be the start of that trend. So, you know, I agree, it could be an opportunity.
He's talking for a short-term play. Now, I've had a quick look at that chart. I couldn't help myself to have a quick look. But, I mean, from a short-term perspective,
if you weren't already in it for a short-term opportunity, then why would you be doing it for a short-term opportunity now?
Okay,
like,
you're
that's
saying
my
it
point.
might have run.
It's more medium to long-term if it triggers what Pedro's talking about.
And it also depends what Steve determines is short-term. So there's some short-term traders that are looking for, is it a day, is it a week, is it a month? So that would actually be quite interesting to know.
That's a great point. All right, well, there you have it, Steve. Maybe not a short-term play for the guys right now, but definitely stick at it. Now, we get into AGL as Reese is asking, hi, Phil. It was great to see AGL as your hot stock tip on tonight's show, or last week's show. I purchased the position at $10.73 on the 25th of June. Now, do you think I purchased it a tad early? I am looking to hold medium term and I have a stop loss of 15%. I would love to get your thoughts on the above. All right, AGL. It was my hot stock tip, so I'm going to be very biased about this one. But Janine?
Look, I do like the stock, so great choice there. The only thing with this is asking, am I too early? I just query why to ask that. You're looking at the chart there and you can see, okay, it started to move up off that low on the monthly, and I'll just expand that out so we can see that. But I'll leave the weekly on there at the same time so you've got a bird's eye view and you can see the short-term movement. But, you know, it was possible to actually buy down here if this was a stock on your list. So therefore, I would question, is it too early? Possibly too early for this part of the run, or too late, you know, is the question, depending on the big picture. But look, I wouldn't be too concerned about it. I mean, there's even a trough here on the 26th of July, 2024, which could indicate if it went through that, it might have to come back for a bigger pullback, could bring it near that 15%, but that might even protect the trade. So I'm not really concerned with it, Pedro.
Yeah, I like the entry. I like where he's entered. And I think that it's got nice upside. So if we put a price range percentage right from his entry, the next major resistance level is at 15%, 16%. But then as we expand this out, we're looking at, I'm just going to expand out the weekly chart. Have a look at that. Well, let's have a look at that upside. So
You're going to make the people wear glasses, Pedro, the way you're doing this.
Do you want me to help you? How about that? I'll give you a hand here.
Yeah,
just to bring that down. Do you want to see the whole history?
Yeah, well, if you have a look at that all-time high, it's a long way away. So basically, I don't think that he's too late. I think it's a good entry, and I'd just be holding on to it and putting a trailing stop loss.
All right, now, I mean, just looking at that chart there, I mean, from your perspective, guys, obviously it's come out of a big fall. It's had a really sharp run up, and you know, a lot of time we do see traders getting in after, as you said, Janine. Perhaps it's a question of whether this is too early or whether it's too late. And
based on your timing, like,
can you expand a little bit on that?
Yeah, if it's short term, I just think that it's too, you're in too late for the short term run. But for the more medium to long term, I think it's probably okay because you're allowed that sort of 15% stop loss. If it was a short term trade, you'd probably want to set a tighter stop loss underneath that low. That's my thinking. The other thought is, will it accelerate from here? And we don't know just yet. We've got only time will tell with that. But it could still come back to towards the angle of that trend yet. We don't know. So it's a bit of a wait and see.
All right, well, there you have it. Now, we do have a text from Ray who's asking, thoughts on JHX, bought on August 1st, 2024. I have a stop loss set at 15%, which was almost triggered less than 2 weeks ago since buying. Now, is this a case of unfortunate timing with recent market events, or was it a poor buy? All right, great question. Now, Pedro, we'll go to you, James Hardy. And tricky times, I mean, buying
Yes.
right before a market crash or supposed market crash.
Yeah, well, it depends. I'd like to know what rule he bought at.
August 1st, 2024.
August 4th, 2024. Now, yes, it's unfortunate. Those bars on the weekly chart are looking pretty bearish. It looks like it's jumped out of bed pretty bad. But it could actually be finding support around that $46 level, where it's found support back in 2024 June, and it could come back up and reach that gap there. So I'd just be putting a line in the sand underneath $46 and seeing where it goes.
Well, look, I mean, it's really up to the individual to decide where their stop loss and what their level of risk is and how much they're willing to give away back to the market. So that's my first comment. But the second one is it's right before reporting season, when he's bought. August, February and August, the two most volatile times you can possibly buy. So the first thing I would have done is go back and see, well, what was it like in previous years? Is this a stock that tends to disappoint the market? Was there any information that came out prior to reporting that, perhaps would have given an update on how the company was doing, and that may have shed some light? The reversal that happened, because the week that he got in, it actually looks like it closed low at the end of the week. So he bought it on looks like the Thursday, and then it closed low. So when a stock closes low, if that was the case when he was buying, and I'm not sure because I haven't looked at the daily, but the week before it closed low. It opened up high, it gapped up, and then was moving down. I wouldn't have gone, for something that was doing that. I would have just waited to see.
So you're saying there's no real entry there from your perspective, from where he's looking at
I would have
buying.
liked to see something, a bit more confirmation on it, that's all.
All right, well, there you have it, Ray. Maybe a little bit more confirmation on the next one. Now, that is it for our take on AGL for Reece. Okay, now it is time to get into the exciting world of mining and metal stocks, but with a twist. Now, we know from experience that the mining sector is one of the most popular sectors on our market, and rightfully so, as this sector, if tackled right, offers some of the greatest profit potential. Now, the thing that makes mining stocks so lucrative is their volatility. The ability to make money fast attracts lots of traders to this space, but we find many trade this space incorrectly. Now, I want to go to you on this one, Janine, because, how many times do we get people ringing into the show, showing us these penny stocks, if you will, a lot of them explorers in the mining space, and a lot of the time they end up either staying sideways or keep falling.
Yeah, and it is a trap, isn't it? The volatility is the thing that you think to yourself, well, gee, if I can get in on some of these stocks that move fast enough, then I'm going to be able to make more money. But in effect, you can actually lose the money faster. And that's the problem, isn't it? So it's a challenge for people. For some people, they see it that way, but it's actually a bit of a trap at the same time. So.
Oh yeah, it takes so much skill. We know from that end of the market, it takes a lot of skill to navigate that erratic price action. Now, I totally agree with what you've just said there. And to me, the problem is that the retail traders are not skilled enough to distinguish a pullback from a correction. Now, this is something you must know if you are to take advantage of stocks that provide corrections. So let's take a look at what Morningstar says on this. A correction refers to a stock market decline greater than 10%, but less than 20%. Declines of 20% or more enter bear market territory. Now, we mentioned before that the mining sector is one of the most volatile sectors on our market. So, Pedro, do these percentages apply to mining stocks as well, or is this a whole nother ballgame?
Well, the thing is that the stocks could actually fall a lot further, and especially with mining stocks, seeing as they're so volatile. So the important thing is for you guys to be able to determine whether it's a correction or the start of a downtrend. And that's where the key is, and I know that being an assessor myself, in our courses, we actually teach how to spot whether it's starting a downtrend or an uptrend as well. So that is a very key thing to take into consideration.
Well, I mean, it's so crucial in trying to get it right in terms of whether you are going to be trading with that longer term trend, and that's going to make all the world of difference in you enacting the really strongest strategies on the market to get those outperformance type returns. Well, thank you very much for that, Pedro. Now, we've done our research on the 15 biggest mining stocks, and the average major correction is around 64%. And wouldn't it be nice if all you had to do was buy these stocks once they've fallen a certain amount? But as you've seen on this show, people tend to buy stocks that are falling, and as a result, they lose money. Also, history shows that these corrections have been up to 90% from their highs. Now, this type of trading is very dangerous and quite often leads to failure. So I want to ask you again, Pedro, what are some of the pros in trading these kinds of stocks that have fallen, or are still falling these large numbers?
Yeah, of course. Well, the obvious one would be that you can actually make a longer term, upside potential. As you can see, you can actually make more gains. And there's also a better risk and reward ratio as well.
All right, great. Nice, short and sweet. All right, now, Janine, it's not positives only. I mean, there are issues when you're trying to trade stocks that are in free fall, and particularly in this sector, it's very, very volatile.
Very volatile. I mean, you've got challenges because experience is such a big thing, but after a major correction, the con in this situation is that there's a higher risk of getting whipsawed out of the trade, and that's the problem. You get stocks trending along the bottom, that they trade up and down, and there are people trying to use that, trade over short ranges to get in and out, getting whipped in and out. You don't want to be on that. You want to be on a decent trend, and that happens much later. So stocks, they stay low, leaving you stuck in stocks. And we hear often people write into the show, or they call into the show, oh, I've got this stock, it's been trading along the bottom for so long. What do I do? It's not going anywhere, so what do I do with it? So that's, if you have one of those, you can ring in tonight and we're happy to chat with you about it, but it's so common.
Oh yeah, totally agree with all that. Now, it all comes down to the confirmation and understanding of how to best structure your trades to maximize on those opportunities. So with that said, it is time to show you the top mining stocks that are now trading at much cheaper prices. Take it away, Janine.
Right, now this is exciting, isn't it? This is like going mining, like ourselves, when if I can use that, because we get to actually have a good look. Now on this list here, you can see that I've got here percentage range from the all-time highs. So these are the falls that some of these stocks have had from their all-time highs, and Paladin had one at one stage, we've got 89% there. We've got Linus Rare Earth, 77%. Once a stock gets through 40%, this is when you should be looking at it, not buying, but looking at it. You need to have a whole series of things lining up before you're willing to risk your hard-earned, because you have to think about it this way. Someone else is out there that's wanting to take your money, right? So how do you best protect that? Forget about thinking about, how am I going to get the most money out of this? It's about protection. So PE ratios, you'll notice, they vary a lot with these mining stocks. And I don't think, Phil, that it's not that easy just to pick these sort of stocks based on the fundamentals, because growth stocks could be trading in the low 20s and still present some really good opportunities, even though we say that, we're best off to go for between 10 and 20 as a PE. We saw situations where the bank stocks were trading at less than 10 for a while there. Some of the miners were less than 10 there.
Well, it's a guide. And I mean, on the flip side of that, and I'll get your thoughts on this, the US market, according to some fundamentals, has been overvalued, if you will. And so, the argument there from a fundamental perspective would be to not get involved in that market. But if you hadn't, I mean, look at the opportunity that you've missed. So, I agree with you. It's just looking at it from holistic kind of view and seeing where things are at. But at the end of the day, the chart's going to tell you what's happening. And, looking at those falls, 84%, 70% off all-time highs, they're the top 15 stocks in the mining sector. So, I mean, it's an understatement to say there's no volatility there.
Yeah, definitely, and huge upside potential with those. And like we said before, the volatility, that's where you're going to make your money. There's no point on trading stocks that only move, that 5 to 10%. You know,
And not looking at these ones for dividend, even though I've got the dividend yield in there, we're not worried about the dividend yield right for these ones because this is about growth from here. But, 8.24%, you can see why people are wanting to put money into stocks like BHP and Rio when they're falling, can't you?
Well, it's very interesting because it's a very dangerous game when you want income, but pushing it in a sector that
What if they fall another 10 to 20%?
which is so volatile.
more?
That's the point. All right, so we do have some stocks now. I know, Janine, you've saved some beauties for us.
We do, which is the exciting part,
Yes,
isn't it? So let's get into this. So this is Pilbara Minerals. Now, you'll see on your screen now, Pilbara Minerals has actually fallen. I'm going to go to the monthly chart first. So just keep this one on your list. It's fallen around 50% from its high, which, it may have further to go because there's another couple of lows here to the downside. If it continues to fall, and it's pushing down this month, indicating that that could be another 30% that we see to the downside if it does continue to fall. And personally, I would like to see it go there. That gives a bit more confidence about the medium to long-term potential of the stock. Because what you've got to be thinking about is if it does turn around from here, what's the next level of resistance? Well, to these highs here, we've got about 30%, but it could be less than that, 20 to 30%. If it falls further down to these levels, well, it's actually just gone up. It becomes like a more of a 70 or 80% opportunity, and that's really why, you want a stock to fall and then come in at the opportune time and not get in too early.
And I mean, this is very different to those low cap stocks that we've seen in the past from callers calling in. So are we ready for the next one?
Always. All right, the next one is, do you want to have a look at this one?
Energy, yeah. So this one's been a good one for a while until it dropped out of bed recently. So
what a shame.
But opportunity, right?
Exactly. And it's in the uranium sector, I believe. So they mine uranium, which
You've got to be careful, mate. With
Gotta be careful.
Janine's giving you the look. She hasn't got the gloves, but
I'm leaning.
Well, look, at least the chart is looking good. That's all we need to know.
We beg to differ on that.
But I mean, to that point, obviously these stocks are going to be falling 40, 50, 60% plus. What's so exciting about, I'll ask you, what's so exciting about when they do fall this amount? Because Janine, you mentioned it's time to look at them then.
Definitely, yeah.
Well, the fact that people were willing to pay a certain price beforehand, that's what's exciting because it can actually trade back up to those levels, right? It's if it's blue sky, yes, it can keep moving up. But when's that level? When is it going to turn back down?
Yeah, all it takes is a political decision and it's canned, right? So that's what you have to bear in mind.
So I guess we've got to go to the next one.
So
right?
let's go to the next one. All right, Mineral Resources, MIN, very interesting here. We've got a decline of around, and it's just gone down further again, I think, is it this week? So let's just pull that down a bit. I just want to see the full extent of it. So we're really close to 50% again on this one, which is nice. But I can see there's some lows just below, so it's telling me that even though this could be close to the turn, it's still pushing down and these lows are still a fair way away. So let's just have a look and get an indication for how much further we're talking, possibly somewhere between 10 and 20% more. If it did that, I'd be really happy about that pullback and then just looking for the whole series of setups and that we generally look for. Because, we have a checklist of all this analysis that we put on the chart and then do a summary and conclusion at the end of what it tells us.
Yeah, I was just about to mention that because it's one thing watching it fall, but I wanted to ask both of you, when you're looking at that, it's what are you looking for after the fall? Because we always say don't catch a falling knife. It's what are you looking for it can be general, but to see when that stock is ripe to now say, okay, well, maybe this is when the opportunity is ready to go.
Well, I can say the biggest thing not to do is go to a daily chart and try to pick it off the bottom. That's just nuts. What you've got to do is try to get a whole series of things like reversals you want to see happening at bottoms and, a nice signal reversal.
Confirmation.
Ideally on the monthly chart, but weekly chart's also good. And then you want to see crossing trend lines or entry rules being triggered, support, confirmation of support levels. That's just a very small amount. I've got a checklist that's sort of like, quite long and for the monthly and weekly charts and pulling all that together. So Pedro, did you want to say something?
I like it when they find support, then trade up and then come back down and test that support level again. If it does test that support level multiple times, then you know that that's a strong level. And if it rises back up, then that's what we're looking for, basically.
All right, beautiful. Another stock?
Oh yes, Pedro, which one would you like now?
Or LYC. So this is one that's been on the news quite a bit. I know that Gina Reinhardt was looking to put some money in there, or has. Although it hasn't fared very well. I do like the pattern that it's forming there. So
And another 50% pullback. That's nice, isn't it?
Another 50%. So they're all kind of uniform.
And that one's close to the low, the previous low.
Yes, and I do like this one better than MIN actually, because it's falling quite orderly. It's not like it's not a sharp fall, right? So it's looking like it's going down to that $5 level, which I think that will be a pretty strong level, seeing as back in 2010, price found support around that level multiple times. So if we see price trading up quite strongly out of these lows, I'll be getting pretty excited.
Okay.
But to me, how important is it looking at a chart? I mean, because at the end of the day, one look at that chart there, you can see, and measuring what's happening now, because someone can say to you a 50% fall's happened in the market, and some people may panic. But when you put that into context and look at what's happened to the left-hand side, particularly Linus, you've seen that stock go up a couple 100% from that low. And when you're measuring a couple 100% move versus a 50% fall, that's where the real power in determining whether that correction is just a pullback to that long-term uptrend, or in fact it really is in a real bearish move. So do we have any more stocks?
Well, Janine's got something to do with it, so definitely we do.
Aluka, this was an interesting one. I think we covered it on the show recently for someone who contacted us about this one. And look, it's continued to pull back down here. We actually covered this too on the Traders Forum that I run each month for our advanced students too. So this was a really interesting discussion that we had. It was about psychology around your trades. But you can see here, it looks like it might be starting to slow down. There's a low here. It could come back to that October 2020 low, which if we look at it there, the percentage terms from where the close is today is probably only about 15% down there. So it may be getting quite close to a turn, I would suggest now, but it still has to jump a lot of hoops before we decide to risk our money on it.
Yeah, I'd be just a watch for me, really. It's that large fall that it had, then it kind of consolidated a little bit here and then just kept on falling. That shows to me that it might have that more to go. And it could actually go down to these levels here, like we saw back in 2019, to that kind of that $3.70, $3.80 level. So this looks like a bit of a catching falling knife scenario. So yeah, I'd be just putting that on the watch list.
But I mean, given these kinds of stocks, I want to get your thoughts on this one, Janine. Given these kinds of stocks are in the top 15, they're the biggest mining stocks, not in the top 15 in the index, but top 15 mining stocks in our market. Watching these falls, and the big stocks in our market, I mean, they are supported by the institutions, aren't they, at the end of the day?
Well, obviously not at the moment, the money's coming out of it. And that's the point, isn't it? Because we can actually see a window into where the money's going. And as soon as we start to see that turnaround, then we're going to have an advantage over the big end of town in being able to, see what they're doing, because they can't hide at this end of the market, can they?
No, and a lot of people don't see that the real advantage in trading is to the retail trader. Big funds have mandates, they have to be invested a certain amount of time in the market. They are hamstrung so much versus how much you can do as a trader out there on your own to get on the piggyback of that, or even outperform them, as you said, get in front or get behind. Did you have any thoughts on that?
Totally agree. So you can actually just ride on the back of the wave, as we call it. So just
which is
be looking
interesting,
at
isn't it? Because when a stock's turning at a bottom, you're not riding on any wave.
Yeah,
there is no wave.
It's a waterfall,
basically. Wow, yeah. We would have chosen another word, but do we have another stock?
All right, so we've got IGO here. So IGO is actually, I really like the way that this has come back as well, but 71% on the downside. When you start to see 71%, the problem with this is it could go 90%, couldn't it? That's the issue here. But the thing that I'm liking at the moment is, if we just have a look here, is that when it came back to this sort of level around here, it did sort of find support from those previous peaks and, the one over here as well. So it's sort of respecting some of these levels. And we do have some support. So it may be that it's got to come back, unfortunately, down to these lows here, this low, or this one to finish, and then eventually we'll see a move back up. But it's still priced at a, it's not turning into a dollar stock just yet.
Yep.
It's still sort of going to be $2, $3 or $4 at that point, which is still okay in my book.
For me, this is more of a trading stock. So if we look back at in 2015, you can see that it does ebb and flow. So you have many opportunities to get in and out. And then, of course, you've got that huge run up to the 2022 high. So there's a real risk that it could actually just go back to that range again from that high of $5.70, say around that $6 to just to round it off, and to that low of say $3. So it could actually just be range bound again for many years. So bit of a trading stock.
I guess if it was, that'd be one of those whipsaw things where, someone who's trying to trade long term in one of these sort of runs, you just can't do it.
Yeah.
And so, while if you may have missed out on the decent run if you were trading short term moving up this high, but it may have been a safer strategy for something like this particular type of stock, and just keep trading it all the way up.
But I mean, let's say you're a long-term investor and you've got some of these big miners in your portfolio and you've watching them ride all the way down. You've got them long-term, maybe
50%
super.
falls, that's nasty.
What are you doing if you're one of those people? Are you thinking, is it time to sell, or is it just the time to bite down, hold on and let that recovery happen in time?
I'd say it's stock specific as to whether you do that or not. And, we can always talk about that on the show. If you've got stocks that you're concerned about, you can contact us about that. We'd love to hear about it. But, like a stock like this, I'd be more concerned about, because it could fall through that low that I've even marked there with the black line. But some of these other ones that looked like they were setting up, like, Linus, some of these, if they're coming near lows where it shows it's found support in the past, we may see some turnarounds from these ones. So you've already travelled most of that distance it was going to fall. But if, for example, Linus took out that low strongly and was heading down really strongly, the problem with that is that where's it going to stop?
Yep.
You don't know. And so sometimes it's best to bite the bullet, just let it go, and then not have so much risk in your portfolio. Maybe sell off something anyway.
I totally agree. That stock specific is really going to show you what to cull, what to keep. But thank you very much, Janine and Pedro, for that. Now, stay with us as we'll be right back after this short break.
This week on Talking Wealth, Jenna Kennedy and Colleen Callender reveal how to become a leader of influence. Don't miss their game-changing insights.
Leadership starts with us. We can all change. We can all just slightly tweak something to become a better version of ourselves.
Tired of corporate nonsense? Money won't cut it alone. Join Matt Murray as we uncover why true success goes beyond the dollar signs. Why does everybody hate networking?
Because it's been done wrong. It's a transaction. And once you have somebody who's been transactional with you, it stops being fun.
What makes life worth living? Uncover the power of Ikigai with Nicholas Kemp.
Guys like us who are still very much passionate about our work, I imagine doing these interviews and learning is part of your Ikigai. It really is the answer to what makes life worth living.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth. Now, that amazing content you just saw is going live this Thursday on Talking Wealth. Moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 0392909988. Or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now we turn our attention to defence stocks as Rose asks, we are watching HighCom and Drone Shield. My husband dipped his toe in HighCom and has seen a 27% rise so far, and we are watching Drone Shield to see if there is any interest. But long term, these companies are part of defence and war type stocks, it would be interesting for you to share your thoughts on this kind of investing. Now, Pedro, I'll go to you on this one first. I mean, two questions in this. First one is, I guess, a little bit on the ethical side of things. War, is it something that you would invest in terms of war, and we can bring up HighCom after that.
Gee, you're putting him on the spot there, aren't you?
Oh, he's new to the show, got to test him a little, right?
Well, definitely, I wouldn't advocate for war in any sense.
But stocks, because I mean, Drone Shield's gone through the roof. So
and they are Aussie companies, so you know, at the end of the day, the money is staying in Australia. But I mean, regardless of that, money is still going to flow into this, and if the stock is going to do something, if it's going to go up, then if you want to be part of that, then you're quite welcome to invest in it. And these guys, they're into helmets and things like that, so it's more of a defensive, if that makes you feel any better. It's
rather
more the defensive,
rather
than the attack side of things. It's more for ballistic.
I mean, to me, what's important about, and I'm not advocating for war or anything like that myself, but it's catching on to trends. Because, you know, right now war is happening, let's face it, and, you know, you are seeing stocks like this, especially in the drone anti-defense systems, starting to rise. So in one way, there is a marry-up of what is happening, I guess, underlying fundamentals with looking at a stock. So from that perspective, Janine, I mean, is there any goodness in doing that? Or
Look, I mean, I just have to focus on the stock itself, okay? So for me, Phil, I'm looking at this thinking, this isn't a liquid stock for a start. You know, the point is, there was an actual entry there, which is funny about this whole thing. But look, you know, the point is having an exit strategy for me. So like, it's not a matter of, you know, whether we think that it's good to get in defence stock. A stock is a stock. At the end of the day, if you have some ethical concerns about stocks, then you just don't trade them. But if you buy something like this, you have to know at that point when you get in, and with any stock, how you're going to get out.
it looks a little illiquid.
Very illiquid. So this is like a day by day, following it each day. You can't afford not to look at this and manage it on a daily basis.
And that spike in price over here, so we've got that 27%, that came out on news. So really you're waiting on the news, whether they've got a new contract or something of that sense. So I could imagine this long down bar here was some bad news. So it's really hard to determine some rules around these types of stocks. Now we've got the weekly chart on the right, and you can see the monthly chart on the left. Just, you know, back in 2012, this.
Can you just expand that monthly chart up so we can see the whole?
Yeah, that's it.
Just the monthly chart itself, perhaps.
Yep.
Yep.
Yeah. So it looks okay until you start zooming out, and you can see that the highest price was what, 5,000. Where was it?
But we don't know if this was a backdoor listing or something, do we?
That's what I'm thinking.
But I mean, is there the argument there that this stock now, after this big fall, is probably basing out long term potentially?
Yeah, well, that's interesting in itself, isn't it? If that's what's happening.
It could be.
Short term though, where do we see the resistance for the rise?
Yeah, and let me just add that this is not a stock to dip your toe into, really. You know, I wouldn't be dipping. You'd have to be pretty experienced to be trading this. So if we put a horizontal line,
because we can see some serious resistance up there, can't we?
Yeah, serious resistance around here.
Yeah.
And it does seem to play in intervals of 30. So you've got that 60 cents, and then you've got 30 cents as well. So if we just copy that line across there, we've got the 30% mark. So yeah, you're going to find some resistance around the 30 cents.
Yeah.
All right. Well, there you have it. Maybe a little bit risky for the guys, but anyway, now we have a text from King who is asking thoughts on Genesis Minerals GMD. Picked up a short medium-term position in early July when it broke through the $2 level with an initial stop loss at 15%. Now it looks like it's just retested the $2 level as well. Now, Janine, King's a regular texter or caller into the show, emailer into the show, and
great.
Genesis Minerals, what do you reckon?
All right, look, let's just have a look at the chart there. So he said that he bought at what price was it?
$2, I believe.
$2. So he's bought at $2, and at what sort of stop loss?
15%.
15% stop. So somewhere down here. So yeah, I'll just put it there for the argument's sake.
Sorry, it's retested $2.
Okay, it's retested $2, and now it's taking off again. Look, I actually think it looks great. The fact that it's taken out this high here, that's fantastic. We should just shrink the chart up because sometimes this is deceiving. You know, you look at stocks and then you think
early July was the position.
It's high. I think this is looking really nice. You know, what size company is it? Have we got that information?
I had this as my hot stock tip a little while back, and I don't recall it being outside the 200, I think. I could be wrong.
Let's just have a look at the volume here. So the volume's saying 18 million by 2. So it is a small company, but big enough, you know, well and truly big enough for an individual to be buying. So I like it. I love, you know, this consolidation, the rise, consolidation, rise, consolidation, rise. I think it's just looking nice. If it can take out that high and keep going, I think there's an opportunity there.
Did you want to add something?
It's very orderly. I like that long-term uptrend that it's forming. The lower liquidity, the lower kind of a market cap that it has would concern me a little bit. But
I'd be watching to see if it jumps an index, you know, like that's one of the things that can happen sometimes with these smaller stocks, don't you think?
Yeah, and if it does, then it could get the attention of some managed funds and so on. And I do like that it's closing on the high of the week, so it could actually take out that high, that $2.30. So.
All right, good. Thank you very much. We are going to change pace here as Brian is asking about back testing. He writes, my question relates to the term back testing. I've used back testing in systematic trading where I code a strategy and then test it across the last 10 years for a particular universe of stocks to see what profit and loss it would have generated. Now, the term seems to be used mainly by Janine, and I'm not sure what it entails. Could you please explain further and perhaps provide an example that shows the back testing results? Now, we're not going to provide any back testing results examples on this show right now, but very interesting. Janine has addressed you. You are the back testing guru.
This is a great question, and well done for actually doing the experiment. You're like a scientist, you know, with that hat on. The main thing here is that we teach back testing as part of the course, and it is a very involved and, you know, and it can be consuming process until you get the process laid down for yourself. So in terms of, you know, like Phil said, that we can't actually show you the details, but it is about having a process and running through how you're going to test any particular stock, over what time frame you're going to test a stock. And, you know, it's just about the time frame for your trade as well, and marrying that up with the time that you're doing the tests for. So not a lot of people, I've met a lot of people over the years, and not a lot of people know how to test properly. That's the challenge, you know. So to me, testing through a computer is fairly black and white and dry. You want your test black and white, so that can be a really good thing, but you don't necessarily see what you need to see because the computer's actually testing all the data, so you're missing what's actually going on in the middle. You know, this is where the process that we teach is so important. So if you're even thinking that you would like to do this sort of thing and learn how to do that, and I'd suggest that you give one of our guys or ladies a call and ask more.
Oh, I'm totally with you. And I mean, as you said, the real experience comes into when you're actually getting in there, getting your hands dirty and looking at those charts repeatedly. That's where you train the eyes on having that second nature view on those. Yeah, because
it takes a lot of the mess out of the whole process and simplifies it right down. It can give people a black and white approach, so it becomes a no-brainer in terms of what you do.
All right, great stuff. Now, we do have a text from Sharon who is asking, thoughts on APA for the long term? I do not own the stock. All right, so Pedro, I'll go to you on this one. APA, Sharon's looking to invest, not an owner right now.
Okay.
Is she on the money?
ABBA Group, yeah. So another volatile one. If we go to the chart, monthly on the left. Let's start off with the monthly actually, because it is quite a volatile stock, and you can actually see what it's doing. It looks like it's finding some support around some key levels at the moment, although there is that risk that it's going to, I'll just get that.
It just looks weird, doesn't it?
Yes.
I mean, it's been going sideways since 2015. It's done nothing.
Yeah,
you know, for a stock to do that, it's not great, is it?
No, it's not, and it's having those downtrends, then pulling back up, downtrend, pulling up. It could actually just keep moving back down. Now, if it was to fall below that level there, then I'm thinking that either we're looking at the
$6 or $7.
$6 or $7.
But look, you know, if it did turn around and go back up, it could be a nice sort of short-term proposition because there's a really well-defined level over and above there. It just depends on your strategy and being able to fit it to that.
But I mean, let me ask you this: that $8 level, that is such a strong level of support, and we know, stocks that continuously find a base at a particular level, there has to be some, strength to that.
Look at stocks like CSL that was testing levels and then turned around and went up strongly. I mean, it's not to say that it couldn't do that. It could. It depends where it is in its big picture, and it may be in a consolidation phase in a much bigger move.
All right, so we're probably saying just hold on tight because the opportunity is probably around the corner for that one. Now, we get into Zip right now as Anthony is asking, hello Dale, Janine and Phil and Pedro, can I please get your thoughts on Zip? Now, I sold at $2 and am now waiting for a pullback closer to mid $1.50. It looks like there's a substantial demand at current levels and it may not go much lower. Now, I still think it will drop a bit lower, so I'm waiting for it for that buy. Interested in your thoughts on the long-term prospects. Now, Janine, I'll go to you on this, but what's intriguing, it can't go any lower.
Yeah, we never say that, do we?
Never say never.
Yeah, exactly. So look, I like the thinking though, the thought of, okay, $2, it hit $2, but where's the exit rule? That's what I want to know. And the pullback, yes, you could be absolutely right. It may very well pull back to around that $1.50 mark in the short term, and that would be a good launching point. You're absolutely correct to look for a new buy rule. But if you're just looking at the monthly chart, it just doesn't show any reason to sell. It's just sort of still long-term bullish. It's not showing me any sort of sign of concern at the moment. Shorter term on the weekly chart, same thing. There's not really any sort of concern unless it takes out this low here, week ending the 9th of August. It could just as easily go up again. You just don't know.
definitely.
He said he's waiting for a pullback to mid 150s. So I want to get your thoughts, Pedro, here. Waiting for a pullback, waiting for something to happen on a stock that looks like it's not pulling back. I mean, is there any danger to him perhaps maybe missing an opportunity here, or would you say, look, you've got your plan, just stick with it and hope that it hits $1.50?
Well, a lot of people actually wait for those pullbacks, right? And then it never ends up happening. And then they end up buying in on FOMO because they said, okay, it's not going to pull back. And then it might actually pull back afterwards. So I'd be putting a little bit more detailed rules around it and really asking yourself, why $1.50? Why is it $1.50 such a strong level? And also take into consideration that volume is actually going up as the stock is going up. So...
look, is he actually saying, I want to wait for it to go back to $1.50 so that I can actually buy it at $1.50? Or is he saying that he would wait for it to hit $1.50, then we'll wait for a buy rule? I just don't understand that whole picture yet.
Regardless, it's quite specific in what's happening with a stock that is moving up. So there you have it. Now we do have a text from Pat who is asking thoughts on ASX GEM. Now bought last Friday at $1.34, has potential to go to $1.75, currently using trend line underneath as a stop loss, Pat. All right, now Pedro.
All right, trend line
lines.
Okay, so it's great that you're putting a trend line underneath there for a trailing stop loss. Now, let's go to the weekly chart first because that's where generally we apply these trend lines. So
they're momentum lines.
They're momentum lines, yes, that's right.
Until they're proven.
Until they're proven.
That's right, Phil.
So let's have a look. So I'm guessing that the momentum line is somewhere around there. I'm not exactly sure. Yep, I like that as a trailing stop loss. There's a possibility that it could keep going up. Look at that. It's broken above these highs. So GEM is actually looking pretty good. I like it.
So let me ask you, his target of I think it was 170, looking for a move up to 170. Is that a reasonable target from your perspective?
Me, that looks like it's you're probably looking at a previous support level. So previous support level around that 2019, that low. That's maybe the reasoning behind it. But I would agree that it could actually reach that level quite quick.
Janine?
Yeah, look, I'd just like to have a look at the monthly chart again quickly. If we go back to that, as Pedro said, it's broken out through all of those levels and looks really nice. In terms of anywhere for it to hit its head, up here around that low of 170, so I'd probably agree with those levels as well, as Pedro said.
All right, so 170, definitely achievable, great stock, and thank you very much for texting in. Now remember to show your support for our channel and smash that like button. If you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now before we let you go, what was your favourite part of the show? Was it Pedro's hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below. Now thank you to all of those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into the best gold stocks to buy now. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck, and good trading.